Stock market investors have been enjoying the longest bull market in Wall Street history, but the bulls stumbled badly earlier in the week before making a slight comeback on Friday.
All three of the major indexes posted losses of up to 4% for the week, the worst five-day run in 6 months. Here's with more on what's behind the big sell-off and more is CBS News senior business analyst Jill Schlesinger. Jill, good morning.
Good morning.
So we're not used to turbulence, but now we're suddenly in a little rough patch here. What's going on?
Well, you know, we had turbulence earlier in the year. Back in February, we actually had a correction, a 10% drop from the recent top. But then things were pretty mellow. And what has started to happen is it's actually this fear that interest rates will keep rising. Now, that's sort of a weird thing to consider.
They're supposed to in a good economy.
Right. It's a sign that things are good right now. So the Fed's been raising interest rates, but now other interest rates that are really based on supply and demand in the marketplace, they're starting to rise. So we have the 2-year Treasury, the 10-year Treasury rising to multi-year highs. What does that do? It makes the cost of borrowing for us, for a mortgage, a car, makes it more expensive, also makes corporate borrowing more expensive, maybe eats into profitability for stocks. And finally, what it does is it gives you the impetus to say, hey, maybe if I've made a ton of money in technology stocks, I'll sell some of those and move it over into the bond market where I'm going to make 3.25%.
So what should we do? First thing I asked you on Friday. What should I do, Jill?
I love that because it is a scary time. So there's a few different ways to think about this. One is, wow, I forgot how risky the stock market could be, and I'm freaked out. And if that's the case, what kind of investor are you really? Do you need this money within the next year? If you do, maybe it's a tuition or a down payment on a home or a car, you've got to get that money out of the risky stock market. But if you're just kind of freaked out and you forgot that it is risky, then if you're going to actually change your allocation and make a shift, be sure not to then just sort of change it again once the market goes up. That's a bad cycle. For most of us, we are actually investing for the long term. You don't have to mess with your game plan. Stick to the diversified portfolio. It got you through in February, and now it'll get you through again.
President Trump had some strong words for the Federal Reserve, saying they had gone, quote, loco for continuing to raise the interest rates. But you just said, isn't this a good sign?
Yeah, it's very curious because remember, President Trump appointed the new Fed chair, Jerome Powell. And really, what is Powell's job as Fed chair? To marshal up all the Fed officials and say, what's going on in the economy? The Fed's got two big jobs. It's called a dual mandate. Create an economic environment that fosters job growth. Well, we've got 49-year lows in the unemployment rate. But don't have the economy heat up so much that we start to see inflation eat away at our progress. That's what the Fed's doing. They're normalizing their policies to try to get interest rates high enough for no inflation, but then again, they don't want to let things heat up too much.
Oh, so much to talk about, Jill, and you're the one to talk to.
Anytime.
Jill Schlesinger, thank you.